welcome to Sectors Up Close. I'm Elena Casas. Today we're focusing on Brazil, and my guest is Stephen Schoenfeld, CEO of MV Index Solutions. Latin America's largest economy goes to the polls on October the 2nd in a race that pits the far-right incumbent Jair Bolsonaro against leftist former President Luiz Inacio Lula da Silva. Lula has a 13-point lead, but latest polls show that gap narrowing as Bolsonaro called on his supporters to take to the streets this Wednesday for rallies to celebrate the country's bicentenary of independence. Bolsonaro has claimed that the polls are skewed, the courts favour Lula, and Brazil's electronic voting system is rife with fraud, fuelling fears he's planning to follow Donald Trump and reject the results. Well, economically, soaring commodity prices this year have boosted the world's largest exporter of soybeans, beef and coffee. This is the Sao Paulo Ibovespa index. As measured in US dollars, it's up more than 10% this year. And over the last 5 years, it's outperformed the wider MSCI Emerging Markets Index by 55%. But will that performance last? Let's ask Stephen Schoenfeld of MV Index Solutions. Stephen, hi, thanks for joining us. To start with then, why should investors be interested in Brazil in the first place?
So Brazil, as you noted, is one of the world's largest exporters, but it's also one of the world's largest economies, seventh largest in population. And in key sectors, it's really a dominant player, whether it's beef, iron ore, energy, as well as agricultural products. It also has a very robust service sector and a large and growing population. So whether you're a global investor or especially if you're an emerging market investor, Brazil is just too big to ignore.
Brazil, of course, is a key commodity exporter, as you mentioned, but in the past it's been vulnerable, hasn't it, to surging and falling global prices of certain key commodities. Is it too dependent on a few key goods, or has it diversified away?
So Brazil still benefits when its major commodity exports go up in price, especially if the dollar is strong, so that increases its intake. But the largest players in Brazil's food and agribusiness industry have diversified globally and have diversified vertically. The best example would be JBS, which is essentially the world's largest providers of protein. They have as many plants in the US and Europe as they do in Brazil, and they are connected to the global economy, as are many other Brazilian companies.
Stephen, analysts from Credit Suisse said in a note today that investors should be staying well away from Brazil until the result of this upcoming election is clear because there's so much uncertainty. Do you agree with that?
I actually don't, for two reasons. One, to be fully out of Brazil risks playing catch up if there is a rally after the election. Two, that analyst may or may not be thinking about the full length of the electoral cycle. As you notice, the polls are narrowing, so it's very likely that there will be a second round at the end of October. Unless the results are super narrow and can be disputed by Bolsonaro, I believe actually there will be a substantial relief rally when there's a clear winner. So there is a risk that there could be nationalistic violence, a little bit out of the Trump playbook. We're seeing it play out today on 7 de Setembro, which is Brazil's Independence Day. Bolsonaro is kind of rattling the nationalist drum, but the Brazilian military has evolved enormously since it relinquished power in 1985. The elites and the business community is not going to be supportive of a coup. I think the risk of a full-on coup, as opposed to maybe a few weeks of uncertainty, are overstated. And the bigger risk for investors is to not have exposure when the excitement of the election is over and there's a clear winner.
Let's talk about monetary policy briefly, Stephen. The domestic rate in Brazil has been hiked to 13.75%. Is the central bank done with hiking, and what's the impact been there on the economy?
So I don't believe they're done. 13% sounds high to someone in Europe or the US, but that's, Brazil has had higher interest rates. But Brazil also has very low valuations in the equity market, and so much of this is priced in. They will have to keep raising rates to prevent a dramatic drop in the Brazilian currency, the real, but I don't think they're going to completely lose control. Much of it does depend on the exchange rate and some of the commodity prices. It's notable that Lula, who's known as a socialist, has already indicated he's going to have a very centrist, not just vice president, but also economic team.
You mentioned that the exchange rate is vital. What does policy tightening in the US and the stronger dollar mean for Brazil?
So it does put pressure on all emerging market currencies, including the Brazilian real. It limits the room of maneuver for the central bank. They would probably rather not be raising rates as much as they are, but they'll do so, I believe, in a moderate way. And the Brazilian economy, and especially the financial sector, is very sophisticated in navigating these kind of changes. And we at Market Vector, we've developed indexes that actually can help investors segregate the domestic part of the economy and the global part of the economy. So using those tools is one piece of a solution set that investors can use.
You mentioned then that investors should be separating domestic from globally focused companies, but which sectors are most interesting in Brazil? How can foreign investors pick and choose?
So if you look at the local index, the Ibovespa, it is heavily focused on domestic companies. It doesn't have sufficient exposure to Brazil's very successful exporters, which, as I mentioned, are quite diversified. So in the export, aside from JBS, which I mentioned, you have a worldwide household name, which is a Brazilian company, which is Ambev. It's also known as Anheuser-Busch Ambev, and in the New York exchange, it trades as Bud. It's the largest beer and beverage maker in the world, and it has operations in close to 200 countries. So that sector benefits from domestic growth, but it really benefits from global growth. And it's a little early to have World Cup fever, but we have the World Cup coming up. There's always a lot of increase in beer consumption. Ambev is going to benefit from that, and it's a globally oriented Brazilian company.
Well, thanks so much for joining us, Stephen Schoenfeld, CEO of MV Index Solutions. Well, that's our roundup of Brazilian stocks. I'm Elena Casas, and this is Reuters.